Hi everyone, welcome to Intentionality. So today I'm sharing with you what rich people don't want you to know. And the reason why I'm sharing these things with you is that most times these things are not taught at school. So let's get to the business of the day. So number one is that you won't get rich off a salary alone. You won't get rich off a salary alone. Why this? It's simply because there's a law called Parkinson's law. And Parkinson's law states that as your income grows, your expenses or expenditures also increases. So by reason of this law, it doesn't matter whether you make $15 an hour or $500 an hour, you still can't be rich. That is why there are people who have good job that pays 200k a year, for instance, yet they are not able to enter into the wealthy place because of this law, Parkinson's law. So I was telling my brother the other time, humorously speaking, that once your income increases, you not eat at certain places again. Why? Not because those places are bad, but now that your income has increased, you are now checking environment. You are now much concerned about many things. So by reason of that, your taste and preferences has also changed. You see, this is how I said to him that the moment your income increases, you not eat Amelia Wache again, but you now go to the restaurant. Why? Because of the law, Parkinson's law. So number one, you won't get rich off a salary alone. Another reason is that your salary only solve your short-term needs. Your salary only solve your short-term needs like your rent or mortgage, your car note, utility bills, and so on and so forth. So number one, you won't get rich off a salary alone. Number two, inflation steals your money, so invest. Inflation steals your money, so you need to invest. Why this? Because this is how banks make their money. Because banks use the money that is in your savings to do business to be able to earn more. So the bank uses the money in the savings. So what then must you do? You must invest. You must invest. That is the only way, because once your money is in the savings account, the bank is using the money because inflation is always on your money. Once you are holding a physical money, there's inflation on it, so it is always depreciating. Another reason is that they are always printing money. So the best way to go about this is only to invest. And that is why you see rich people always investing and investing into assets. And this leads me to my third point, that you must buy assets and not liabilities. What are assets? Assets are systems that brings money into your account. Any system at all that brings cash flow to you is called an asset. For instance, if you have a rental property whereby you are renting it out to, let's say, 10 people, and each of them is paying $1,000 a month, that alone is making you $10,000 a month, easy. But most times people focus on buying liabilities, and they buy those liabilities like sneakers. So you see one person having 100 pairs of sneakers. I'm not saying that it's bad, and I'm not saying that you don't need them, but as you are building wealth, you must learn to buy assets the more than liabilities. Focus on buying assets more than liabilities, because with 100 pairs of shoes, you would only be able to wear one at a time, just one pair. And can I shock you, nobody really cares about what you wear. Yes, look presentable, but nobody really cares about what you wear. Are we together? That is why you see extremely successful people always simple and then good looking. Why? Because they know that their true worth is not in anything physical, anything exterior, but what is inside of them. That is why you always see them as simple and good looking. It was my mentor who said, why must you fake what can be real? There are people who are looking rich, but they are not rich. But there are people who are rich indeed, yet they are simple. So pay the price to be rich, not to look rich. So number four is that don't spend more than you make. Don't spend more than you make. If you are making $1,000 a week and then you are spending $2,000 every week, that means that you're going to land in debt. And with debt, you'll not be able to build wealth, not even to talk of perpetuating the wealth. And the last is that compound interest works wonders. Let me give an example on this. Imagine you are 20 years of age and you open a Roth IRA account, and each month you decide to put $200 in that account. By the time you are 60 years old, with 12% annual interest rate, you'll be able to make 2,376,680. 2,376,680. 680. That means that in the span of 40 years, you'll be able to make 2 million US dollars. On the other side, if you keep your money in your savings account with the same $200 each month, and then you are diligent to put that $200 every month into your account, that means that by the end of the year, you'll be able to make 2,400 US dollars. And within the span of 40 years, you'll be able to make only 96,000 US dollars, which is less than 100K. So compare you keeping your money in the savings account and then putting that same amount in a compound interest account, in this case Roth IRA. So you must understand that putting your money in savings is good, but it's not the best. You must put your money in a compound interest account. And this is what the rich knows. So once they give birth to a young child, they open such account for their children and they continue to put the money there. So by the time that child turns 18 years old, that child is already a millionaire. You see, so compound interest works wonders. I hope this video has helped you to be able to understand what the rich don't want you to know. If you find value in this video, please do what you like, share with families and friends, and also let me know your thoughts in the comment section. If you haven't subscribed, please do what to subscribe. Thank you so much, stay safe, and I'll see you in my next video.